All right, today we're tearing down AAON's third quarter earnings for 2025. This is a really pivotal report for the company, and the way the market reacted tells this fascinating story about massive growth, some tricky execution, and of course, the AI boom.
So, right out of the gate, the market sent a really clear signal on November 6th. The stock shot up 7% in just one day after the numbers dropped. That's a huge move, and it tells you that, on balance, investors really liked what they heard.
So what exactly drove that pop? Well, the big headline was a solid earnings beat. AAON delivered earnings per share that came in about 4 cents higher than what Wall Street analysts were forecasting.
Okay, let's get into it. Here's how we're going to break this all down. We'll start with those top-line results, then dig into the real story behind the numbers. After that, we'll check out what management is guiding for, and then we'll wrap it all up with our take on what to expect next quarter.
First things first, the headline numbers. And honestly, it was a clear, decisive beat against Wall Street's targets for both revenue and profit. No ambiguity there.
Now this is where it gets really interesting. Look at the sheer size of that revenue beat. Yeah, the EPS beat was solid, for sure, but revenue, it came in a massive 14% ahead of what anyone was expecting. A top-line surprise like that tells you something pretty significant is happening under the hood.
And that brings us to the core narrative of the quarter. See, this wasn't some simple story of everything going right. It was really a tale of two very different businesses inside one company, moving in completely opposite directions.
And wow, this slide just lays it all out, doesn't it? It's like a two-sided coin. On one side, you have their BASX segment. That's the part that serves the data center market. Its sales nearly doubled, and its backlog more than doubled year over year. Just explosive growth, all driven by the AI build-out. But on the other side, the core AAON HVAC business actually saw sales dip a little as it wrestled with some serious operational challenges.
And you don't have to take my word for it. The CEO himself put a fine point on it. This quote confirms just how insane the demand from data centers has become. BASX is, now without a doubt, the growth engine for the entire company. It's pulling the whole train forward.
Okay, so this is the crucial point. While that data center demand is absolutely on fire, the company's profitability took a major hit. Gross margin fell over 700 basis points compared to last year. It got squeezed by inefficiencies from a new ERP system rollout. That's kind of the software brain of their manufacturing, and the costs of getting a brand new factory up and running. This right here explains why the stock, despite that big initial pop, kind of faded from its highs as investors started to digest these margin pressures.
Now, let's see how this all feeds into what management is saying about the future. Because interestingly, despite those margin headaches, the team signaled that they're feeling more and more confident about the rest of the year. They went ahead and officially raised their full-year sales growth forecast, bumping it up from the low teens to the mid-teens, and that's a direct result of that incredible BASX strength. But just as important, they gave a specific gross margin target, which basically tells the market, hey, we think the worst of this operational pain is stabilizing, and we expect things to improve from here. The Q&A session with analysts really hammered these points home. Management kept using the word tremendous to describe the data center pipeline. They detailed their plans to fix the execution problems, including bringing in a new COO. And they directly pushed back on a recent short seller report, really showing a united and confident front.
All right, let's put all this together and look ahead. It's time for our analysis and reading on what to expect for the next quarter.
This is really the key question for every investor looking at the stock right now. Does that incredible growth story in data centers have enough power to overwhelm the very real execution risk that they're facing in the core business?
Here's how we see this playing out. We fully expect the Q4 results to confirm these positive trends. Revenue should keep growing strong, and those margins should keep ticking up. And if, and it's a big if, but if they deliver on that, we believe the stock is going to regain momentum, which leads us directly to our rating.
Our call is outperform. We think the market is still a little too focused on the temporary margin issues and is kind of underappreciating just how long-term and durable this growth story driven by the BASX data center business really is. So to wrap it all up, the thesis is to be long AAON. The play here is that the company is really in the early innings of a major pivot, becoming a critical supplier to the whole AI revolution. The catalysts to watch for are clean operational execution and continued margin recovery over the next few quarters. Now, the primary risk is pretty simple. If they stumble on execution again, or if that massive data center backlog starts to slow down, this whole story could break. And of course, just a reminder, this is not financial advice.